Hello students, in present video I am going to explain about 12th problem from company accounts topic. I am taking this question from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. 12th problem. The directors of the electrical equipment company limited having an authorized capital of 10 lakh rupees issued a prospectus inviting applications for 75,000 equity shares of 10 rupees each at a premium of 2 rupees per share and for 5,000 5% debentures of 100 rupees each at 98 rupees per debenture. The shares were payable 5 rupees on application, 5 rupees including the premium on allotment and the balance in 2 equal installments of 1 rupee each. The debentures were payable in full on application. The capital offered was subscribed and the whole of the debentures issued was applied for immediately. The amounts were received as follows. The full amount due on applications and allotment of shares. The full amount due on applicator for debentures. 74,000 rupees on account of first call on shares. 70,000 rupees on account of final call on shares. The shares of one shareholder who failed to pay the first and final calls on 500 shares held by him were forfeited after giving him due notice. Draft journal and cash book entries to record the above transactions and state how they would be shown in the balance sheet. This is the question. Let us see the solution for this. Let us understand the question first. Electrical Equipment Company Limited, a public limited company. Its authorized capital is 1 lakh shares at the rate of 10 rupees each. 10 lakh rupees. Company is authorized to collect 10 lakh rupees money from shareholders through share capital. Issued capital. So there is no rule that total shares in 1 year only company should issue. In current year, out of this 1 lakh, 75,000 shares are issued by the company. One share face value 10 rupees. So issued capital is 75,000 shares at the rate of 10 rupees each, 7,50,000. Not only shares. In this problem he is giving that company is issuing debentures also. 5,000 debentures at the rate of 100 rupees each company issued. Debenture value is 5,000 into 100 rupees each, 5 lakh. But debentures are issued by the company at a discount. Discount is on one debenture 2 rupees. Means total discount amount 5,000 debentures at the rate of 2 rupees each, 10,000. To company this is a capital loss. In books company is writing that 5 lakh worth debentures are issued. But actually speaking, how much money is coming from debenture holders? 100 minus 2, 98 rupees on one debenture. 98 rupees into 5,000 debentures, 4,90,000 only is coming. Share money, how company wants to collect? On installment basis. Application money, allotment money, first call money, final call money. In 4 installments, share capital amount company wants to collect. But debenture amount, 4,90,000 rupees, company is going to collect through application only. And you may get one doubt. While calculating issued capital, only share capital amount we should show or even debenture amount also we should add. Remember, while calculating authorized capital, issued capital, subscribed, called up, paid up capital, only share capital amount we should consider. So debenture amount separately we have to show. So don't think that issued capital is 7,50,000 plus 5 lakh, 12,50,000. Issued capital is only 7,50,000. Debenture amount we should not consider here. Next, subscribed capital. So company issued for 75,000 shares. Public applied for all those shares and company allotted. Means subscribed capital is 75,000 shares at the rate of 10 rupees each, 7,50,000. Public applied for all debentures also. Company allotted all debentures also. Next, called up capital. One share face value is 10 rupees now. Through application, company is going to collect 5 rupees. Allotment money, 5 rupees including 2 rupees premium. So actual allotment money is 5 rupee minus 2 rupee, 3 rupees only. First call money 1 rupee, final call money 1 rupee. 5 rupees plus 3 rupees, 8 rupee plus 2 rupees, 10 rupees. 10 rupees the face value. and the premium is 2 rupees. So issue price of one share is 12 rupees. And in question is giving that company collected 74,000 rupees through first call and 70,000 rupees through final call. And the company received application money and allotment money on 500 shares. So on 500 shares, first call money, final call money not came. And these 500 shares are forfeited by the company. In question, this information is given. And he is asking us to prepare cash book, journal and a balance sheet. So before going to cash book, let us see how much is a paid up capital amount. Because in balance sheet, we have to show paid up capital amount separately now. Called up capital is how much? 75,000 shares at the rate of 10 rupees each, 7,50,000. 500 shares are forfeited now. So 500 shares related amount. 500 shares into 10 rupees each. 5,000 we have to subtract from called up capital because that money is not going to come. So minus shares forfeited 5,000, 7,45,000 rupees should come. And in this problem, related with the first call and the final call, calls in area amounts are given. And what about 500 forfeited shares? On 500 shares also, only application allotment money came. Means first call, final call due is there. So here you need some more clarity about the number of shares forfeited. Observe, first call, how much money should come? Company allotted 75,000 shares, no? 75,000 shares into one share first call amount 1 rupee. 75,000 rupees should come. But in question he is giving that first call amount received is 74,000 only. So 1,000 is not coming. On 1,000 shares at the rate of 1 rupee each, 1,000 is not coming. Similarly, come to final call. How much amount should come? Subscribed shares are 75,000. On one share, final call amount is also 1 rupee. Means 75,000 rupees should come. But in question clearly is giving that company received only 70,000 for final call. Only 70,000 is coming. Means on 5,000 shares at the rate of 1 rupee, 5,000 is not coming. Means what? On 1,000 shares, first call money not came. On 4,000 shares, first call money and final call money not came. But how many shares are forfeited? 500 only, no? Means what? All shares are not forfeited by the company. Only 500 shares are forfeited. So on remaining shares, there is calls in arrear. That remaining shares related calls in arrear amount we have to subtract from 7,45,000. See, minus calls in arrears. First call, total shares allotted 75,000. In that 500 shares are already forfeited. 75,000 shares minus 500 shares on 74,500 shares at the rate of 1 rupees each. How much first call money should come? 74,500. But how much amount came? Given in the question, 74,000 only. So 500 is the calls in arrear for first call. Come to final call. On 74,500 shares, because already 500 shares are forfeited. Final call amount also on one share, 1 rupee, no? At the rate of 1 rupee each. How much money should come? 74,500 rupees. But how much amount came? 70,000. So related to final call, calls in arrear amount is 4,500. So total calls in arrear amount 500 plus 4,500, 5,000. So that amount is also not came from the shareholders. Therefore, from 7,45,000 subtract this 5 lakh calls in arrear. Then the remaining amount 7,40,000. And forfeited shares are there, no? 500 shares. On these shares, already company received application money, allotment money, no? Application money 5 rupee, allotment money excluding premium we should take 3 rupee. So 5 rupee plus 3 rupee, total 8 rupee on 500 shares company received. So these shares are not yet reissued. Means the amount which is already received on these shares, 500 shares into 8 rupees per share, 4,000 will be in which account? Share forfeited account. In previous problems I have explained. So the credit balance in share forfeited account, 4,000 rupees also we should add to that amount while calculating paid up capital. So plus share forfeited account credit balance amount is how much? 4,000. Then finally 7,44,000 is paid up capital. So in balance sheet, while showing paid up capital amount, we have to show this calculation clearly. First is asking cash book now. Let us prepare cash book. This is the format of cash book. Particulars amount, debit side, credit side. Debit side we have to show more details now. That is why I left more space here. Cash transactions we are going to show here. Cash receipts, cash payments. Cash is an asset. Asset related accounts are real accounts. So remember, cash book is a real account. Real account rule we have to follow while posting the transactions in the account. Real account rule, debit what comes in, credit what goes out. Means cash receipts we have to debit, cash payments we have to credit. First what happened? Company issued 75,000 shares and company received application money. On one share, application money is 5 rupees. On 75,000 shares, at the rate of 5 rupees each, application money is coming. So, debit side, further you have to write 2 share application account. On 75,000 shares, at the rate of 5 rupees each, 3,75,000 rupees coming. Not only shares, company issued debentures also. 5,000 debentures at the rate of 98 rupees each because 2 rupees discount now. So debenture money is also coming. Debit side, 2 debentures account. Calculation, 5,000 debentures at the rate of 98 rupees each. 4,90,000 is coming. Next, allotment money. On 75,000 shares at the rate of 5 rupees each, allotment money is coming. In this 5 rupee, 3 rupees actual allotment money, 2 rupees premium money. Debit side we have to show that. 2 share allotment account. On 75,000 shares at the rate of 5 rupees each, 3,75,000 rupees came. Next come to first call and final call. We need not to show the calculations because amounts are directly given in the question. First call money 74,000 rupees came, final call money 70,000 rupees came. These two amounts on debit side. To share first call account 74,000 rupees, to share final call account 70,000 rupees given in the question. Finally, two side totals. Debit side total is more, 13,84,000 rupees. Credit side, by balance carried down, same amount, 13,84,000 rupees. Total same. Cash book is completed. Next, journal. Take a screenshot of cash book. Let us write the journal entries now. See, application money received entry, allotment money received entry, debenture money received entry, first call, final call amounts received entries. We need not to write in journal because already we have prepared cash book. These transactions directly we have posted in cash book. Remaining entries we have to write here. Related to application, there are two entries now. First one, money received entry. Second one, transferring the application money to share capital. That second entry we will write in journal now. When money is received on application, what entry we wrote? Bank account data to share application account. Share application account we have created. Now that share application amount we are transferring to share capital now. So share application account will get closed. By crediting we have created that account. If you want to close you have to debit. Therefore share application account data to, we are transferring application money to share capital now. Share capital is a liability. Liability shows a credit balance. Therefore we have to credit share capital account. Amount 75,000 shares into on one share application money 5 rupees, 3,75,000. Journal, serial number, particulars, debit, credit. First entry, Share application account data to share capital account. On 75,000 shares at the rate of 5 rupees each application money, we are transferring to share capital now. Mention that as a narration. Being share application money on 75,000 shares at 5 rupees per share is transferred to share capital account. Second entry is for discount on issue of debentures. 5,000 debentures are issued at the rate of 100 rupees each. Face value of one debenture is 100. But there is a discount of 2 rupees here. Finally, company is collecting 98 rupees from debenture holder, not 100 rupees. Assume that there is no cash book in this problem. Then what is the actual entry for this issue? Let us see. How much amount is coming from applicants? 98 rupees into 5,000 debentures, 4,90,000. That amount is deposited in bank account now. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. Bank is a receiver. Therefore, debit bank account. With how much amount? On 5,000 debentures at the rate of 98 rupees each, 4,90,000 rupees kept. Discount loss is how much? On 5,000 shares at the rate of 2 rupees each, 10,000 rupees. Discount on issue of debenture is a loss to company. So loss comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This discount loss we have to debit. Discount on issue of debentures. Account debtor. How much? On 5,000 shares at the rate of 2 rupees each, discount loss is 10,000. 2. These two amounts we should transfer to debenture. So why debenture is created? Because debenture is a liability to the company. Liability shows a credit balance now. Therefore, credit debenture account. With how much amount? 5,000 debentures are issued. And in books we are writing that one debenture face value is 100 rupee. Issued at a face value only. So 5,000 into 100 rupees, 5 lakh. If cash book is not prepared, this is the actual debenture entry. But in present problem, cash book is prepared. Therefore, bank account debtor, we should not write in journal now. If you remove that, discount on issue of debentures account only is debited, 10,000. To debentures account, amount is 10,000. So this is the actual entry for discount on issue of debentures. Second entry, discount on issue of debentures account debtor to debentures account. On 5,000 debentures at the rate of 2 rupees per debenture, there is a discount on issue of debenture now. Write that as a narration. Being the entry for discount on 5,000 debentures at 2 rupees per debenture. Next is for allotment related entries. Transfer entry we write here. Money received entry already we have posted in cash book. On 75,000 shares at the rate of 5 rupees each, allotment money should come. In this 5 rupee, 2 rupees premium no. So actual allotment money on one share is 3 rupees. So finally applicants are debtors for how much money? 2,25,000 actual allotment money plus premium money 1,50,000, total 3,75,000. So debtor is an asset. Asset shows a debit balance. Therefore, we have to debit share allotment account with a total amount 3,75,000 rupees. In this actual allotment money 2,25,000 we should transfer to share capital account. No? So share capital is a liability. Liability shows a credit balance. Therefore, credit share capital account with actual allotment money 2,25,000. Premium money we should transfer to share premium account. To share premium account 1,50,000 rupees. Why share premium account is created? Share premium is a capital gain to the company. Capital gain comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is gain. Therefore, as per nominal account rule, share premium account is created. Third entry, share allotment account debtor to share capital account to share premium account. On 75,000 shares at the rate of 3 rupees each, share allotment money we are transferring to share capital 2,25,000. On 75,000 shares at the rate of 2 rupees each, share premium money we are transfer into share premium account. Mention that as a narration. Being share allotment money on 75,000 shares at 3 rupees per share is transferred to share capital account, and premium money on 75,000 shares at 2 rupees per share is transferred to share premium account. Allotment related entry completed. Now come to first call related entry. Two entries. First transfer entry, then money received entry. Money received entry we wrote in cash book now. So transfer entry we'll write here. On 75,000 shares at the rate of 1 rupee each, 75,000 rupees should come from applicants. Applicants are debtors for 75,000 rupees. Debtor is an asset. Asset shows a debit balance. Instead of debiting applicants' names, we debit share first call account. Share first call account debtor. Amount 75,000 rupees. 2. We are transferring this first call money to share capital account. Share capital is a liability. Liability shows a credit balance. Therefore, share capital account we have to credit to share capital account. Amount same 75,000 rupees. Fourth entry, share first call account data to share capital account. On 75,000 shares at the rate of 1 rupee each, first call money should come now 75,000. That amount we are transferring to share capital. Mention that as a narration. Being share first call money on 75,000 shares at 1 rupee per share is transferred to share capital account. Next entry is for share final call. Same like first call, only transfer entry we should write. Share final call account data to share capital account. On share final call also amount is same because one share final call is 1 rupee only now. On 75,000 shares, 75,000 rupees. Fifth entry, share final call account data to share capital account. On 75,000 shares at the rate of 1 rupee each, share final call money we are transfer into share capital now. Being share final call money on 75,000 shares at 1 rupee per share is transferred to share capital account. Sixth entry, last entry is for forfeiture of 500 shares. Previous entries when you observe, share capital we have created here no. See, first entry, share capital is created with 3,75,000. Third entry, share capital is created with 2,25,000. Fourth entry, fifth entry, share capital accounts are created with 75,000 rupees. So total 7,50,000. In share capital account, there is a credit balance of 7,50,000. Now 500 shares are forfeited. So 500 shares into 1 share face value is 10 rupees now. 500 into 10 rupees, 5,000 shares. From share capital we have to cancel. So by crediting we have created share capital account. If you want to cancel you have to debit. Therefore share capital account we should debit. Share capital account data 500 shares at the rate of 10 rupees each. We are cancelling now 5,000 rupees. 2. On these forfeited shares, company received application money, allotment money no. Application money on 1 share 5 rupees. 500 into 5 rupees 2,500. Allotment money including premium 5 rupee. But we should not consider premium amount here because premium income separately we have shown no in third entry. Here also if you take premium, then the meaning is 2 times you are showing premium income, which is wrong. Therefore don't consider premium 2 rupee here. 5 rupee minus 2 rupee, 3 rupee actual allotment money. 500 into 3 rupee, 1,500. So total 4,000 rupees coming on forfeited shares. This 4,000 is capital gain to the company because company is not going to return that money to these applicants. So capital gain comes under nominal account. As per nominal account rule, that 4,000 should be credited. And account name, share forfeited account. To share forfeited account. Amount we have calculated now 4,000 rupees. Next 2. First call money, final call money not came on these forfeited shares. These 2 accounts we have to credit. 2. Share first call account. Amount On 500 shares at the rate of 1 rupee each, 500 is not coming. That amount to share final call account. Same. On 500 shares at the rate of 1 rupee each, 500 is not coming. This is forfeiture entry. Sixth entry, share capital account data, 2 share forfeited account, 2 share first call account, 2 share final call account. 500 shares are forfeited. So 500 shares related capital amount, 500 into 10 rupees each, 5,000. We are debiting to share capital account. The amount which we received on 500 shares, application money 5 rupee, allotment money 3 rupee, no? 500 into 8 rupees, 4,000. We are transferring to share forfeited account. And the amounts which we are not receiving on this 500 shares, first call money, final call money, we are crediting to first call and final call accounts. Mention that as an addition. Being the forfeiture of 500 shares of 10 rupees each, fully called up for non-payment of first call and final call amounts. Take a screenshot of journal. Journal is completed. Next, balance sheet. This is balance sheet. Balance sheet of Electrical Equipment Company Limited, asset dash, liabilities amount, assets amount. Under share capital heading, we have to show different categories of capitals. First one, authorized capital, 1 lakh shares at the rate of 10 rupees each, 10 lakh. Issued capital, 75,000 shares at the rate of 10 rupees each, 7 lakh 50,000. Subscribed capital is also same, 7 lakh 50,000. Called up capital. Called up capital is how much? Same, no? 7 lakh 50,000. And how to calculate paid up capital here? See, 500 shares are forfeited and not reissued. These shares amount we have to subtract from called up capital amount. So minus share forfeited. 500 shares at the rate of 10 rupees each, 5,000 now. Then the remaining amount 7,45,000. Total shares are 75,000. In that 500 shares are forfeited. 75,000 minus 500 is equal to 74,500. On 74,500 shares at the rate of 1 rupee each, 74,500 first call money should come. But in question he is giving that only 74,000 rupees coming. Means in first call there is a calls in arrear of 500 rupees. 74,500 into 1 rupee. 74,500 rupees minus 74,000 rupees. 500 is the calls in arrear money in first call. Final call, same. On 74,500 shares at the rate of 1 rupee each, 74,500 should come. But in question is giving that company received final call money 70,000 only. Means here also there is a calls in arrear. 74,500 rupees minus 70,000, 4,500 is the calls in arrear in final call. So these shares are not yet forfeited now. Therefore, in balance sheet, while calculating paid up capital, from called up capital, we have to subtract this calls in arrears. First call calls in arrear 500 plus final call calls in arrear money 4,500. Total calls in arrear is 5,000. Subtract that from 7,45,000. Then the remaining amount 7,40,000. 500 shares are forfeited now. These shares are not reissued. Means the amount which we received on these forfeited shares, 4,000, we have created to share forfeited account now. This account is not yet closed. If we reissue the shares, this credit balance we transfer to capital reserve. Since there is no reissue, this amount is appearing in share forfeited account only. So the credit balance of share forfeited account 4,000 to while calculating paid up capital, we should add to called up capital. So 7,40,000 plus 4,000. Finally, paid up capital is 7,44,000 rupees. Next, under reserves and surplus, the credit balance of share premium account 1,50,000 we have to show. See the journal entry. In third entry, there is a credit balance of 1,50,000 in share premium account now. This amount appears in balance sheet here under reserves and surplus. Next, debentures are given in this question now. Under secured loans, we have to show debentures on liability side. Debentures, 5,000 debentures of 100 rupees each, 5 lakh. For totaling purpose, we should not consider authorized capital, issued capital, subscribed capital. That is why we drew lines. Paid up capital amount plus reserves and surplus secured loans amounts. These three amounts, if you add, total on liability side 13,94,000. Come to asset side. In present problem, debentures are issued at a discount. No? This is loss 10,000 rupees. That loss appears on asset side under miscellaneous expenditure heading. Then 13,94,000 minus 10,000. Then the remaining amount 13,84,000 is cash at bank. We wrote journal entries, no? If you post all those journal entries in cash book, then also balance carried down 13,84,000 comes. Now asset side total 13,94,000. So two side total same. Take a screenshot of balance sheet. This is the end of present video. Hope this video is helpful to you. Thank you.